In this time, arching across the decades of the Economic Cycle Research Institute, Lakshman Achuthan joins us now. You guys have such a heritage. What does war mean to you? How does it adjust cycle research?
Well, it's shocking, right? It can be when it happens, and in this case, I think that's what we're looking at. And what's very interesting in cycles is how is the cycle set up when the shock hits, and that is the key thing to understand. So there's inflation cycles, and we had an inflation cycle upturn starting without the war. And I want to get into that. There's some layers to that you have to, I think, are important to understand. And then on the economy, on growth, again, it depends where are you in the cycle when the shock hits. We have shocks all the time. Some are recessionary, they end badly, and some you kind of take the hit and move on. And right now,
which is this?
Right now, we're not vulnerable to a hard landing. That's the bottom line.
But there is this, I was thinking about what we're paying more here in America at the gas pump.
Absolutely.
And I was just looking at in Europe, it's even worse.
Yeah.
I mean, we're a net exporter of energy here in this country. The rest of the world most of it is a net importer. So they're really bearing the cost here. But talk to us about the U.S. inflation risk from maybe higher energy.
Yeah. So everybody, Europe and us, are part of the global industrial cycle. So there's a global industrial cycle upturn that happened. It began last summer. And once that starts happening, then early inputs, it could be energy, it could be industrial metals, it could be other kinds of chemicals and things that go into everything we consume every day. All of those things start moving up, and they all started moving up last summer. Now, over the last several months, there's inflation cycle upturns. That's very different than energy. That's broad-based, and that's happening in the U.S. It's happening in Europe.
Right.
And on top of that, you're getting this oil shock. I think everybody's looking at oil shock saying, that means inflation? No. You're missing the forest for the trees.
Help me with demand destruction here. What do you say about GDP? And critically, is it filters through residential investment, business investment, and the type. Confidence evaporates, right?
Well, look, so the oil shock is going to hit sentiment pretty fast, and that's what you're seeing. People are freezing up. They're saying, wait, everything's volatile. Let me put things on hold. Yeah. You're getting that kind of stuff happening. However, the underlying business cycle, the economic cycle, is not really rolling over. We've been talking about that earlier. Last year, we were talking about Goldilocks, right? It was like strong growth and inflation.
4 weeks ago, we were talking about Goldilocks.
No. I said Goldilocks was over last time I was here. But here we have an economy that is not that vulnerable to shocks. So I'm not saying this won't change, but right now, consumers are going to continue consuming.
What did you take away from the Fed yesterday from Chairman Powell?
Yeah. Well, I mean, I think the presumption of rate cuts are easing, right? That's the headline from what he's saying or what everybody's reading into what he's saying. I would have said that that's a thought that was useful before the war. Mm-hmm. The war is making everybody focus now, and I think they're focusing on oil. The risk there is that, let's say things resolve in the next few weeks. I can imagine people saying, oh, okay, now we're going to price back in cuts. I would put a pause on that because the inflation cycle is already starting to move before the war.
Okay, this is really, really important. Lakshman Achuthan with this, folks, the Economic Cycle Research Institute. They do economics. They do analysis of America's economy, a bit different than what we usually see. Paul, help me here. We have a number of guests that have said we could literally see a whipsaw from inflation worries. This gets solved, and all of a sudden there's disinflation, deflation. You're pushing against that, right?
Yeah, 100%. That's on a cyclical basis. So I'm looking out a few quarters. That's not in the cards. I think if you want to talk structurally, we have the sky's clear and AI solves all the supply problems. That could take many, many, many years. That's not what we're dealing with here. When I talk about cycles, I'm looking out the next several quarters. What is the cycle risk? The cycle risk, very clearly, is the inflation cycle upturn. I was saying that actually last month. And then I think on this question of, is the shock of the oil spike going to create a hard landing here? We don't see that.
So what's the play here for the Fed? I'm looking at the WIRP function, the world interest rate probability. I got no rate cuts in 26 here.
I'm fine with that.
Market's pulling that back?
I'm fine with that.
Okay.
An inflation cycle upturn makes that difficult.
Right. Okay.
And let's, you mentioned Nixon, Tom, you did it. You mentioned Nixon. You went all the way back to the 70s. Think about what happened there. You had an oil embargo, totally different than the Strait of Hormuz. It's a different situation. But you had a pretty effective OPEC or oil embargo, and you had a Fed that was trying to be helpful. And they were saying, "Oh, we're gonna ease, we're gonna cut," and it got pretty dramatic.
Tin soldiers and Nixon coming. I'm not going to sing it right now. Good morning, Mr. Young. Thank you for listening. Lakshman Achuthan, as simple as I can. If you go back to there, one of the stark differences now is the two Americas, the divide that we have. We have a massive profit juggernaut of haves, and we got everybody else. And Governor Myron and others will say they're flat on their backs. Are we going to forget those people if we don't cut rates?
Yeah. The answer is, I mean, look, this is the K-shaped issues and the imbalances underneath the headline growth numbers are real. I don't see those resolving in here in any way. Look, if you have a big debacle and you have everything goes off the rails at some point, that is a reset. But that's not in the cards here. That's not now cyclically.
So one of the issues prior to the Iran war was just AI and how much that was going to improve productivity of a labor force that doesn't seem to be growing at all. How do you view AI? Is it a net positive for this economy in the near term?
Near term, no. Longer term, absolutely. But near term, look. Now I'm still going to test your history. I'm going to go all the way back to the productivity miracle, Greenspan, all that in the 90s. That was the whole story, right? Was that tech was going to give you all this productivity, and it eventually did. But you had an inflation cycle upturn nonetheless. Productivity was running high, and the Fed hiked at the end of the 90s, and you know what happened then.
Speaking of Nixon, how long have you lived in New York City?
I've been in the city since 1990.
1990.
Yeah.
Okay, I've got to ask you because Lakshman
and then I was on Long Island.
Is very visible within all the things going on in Manhattan and the five boroughs as well. Your thoughts, a la Washington State, a la California, and some of the thoughts here of estate tax planning, the thoughts here of taxing the wealthy, the haves. Don't they just exit? Would you like to make an announcement you're moving to Miami?
I'm not. I'm staying here. I'm staying here. My father-in-law made a quip once, and he had been successful. And he said, the whole point of having money is living where you want.
Yeah. Thank you. No, you're preaching to the converted here.
He's like,
folks, go see the Frick Museum. If you got nothing better to do, come to New York and go to the Frick Museum. It is the greatest restoration ever. Okay, with that said, I mean, I'm sorry. I mean, Alexis Christophorous can move to Florida.
Yeah,
That's
you
all
can.
there is to it.
Look, we all learned this with the remote stuff. You can move places. You can do things. That's the new economy we're in. But I'm a New Yorker. Look, I love this city.
How about the U.S. consumer here? We're all well aware of the K-shaped economy, but how problematic is it for this economy when so many of the U.S. folks, are living? They're not benefiting from the stock market, the bond market, the real estate market, so they're living paycheck to paycheck. When gas goes from $2.80 a gallon to $3.80 a gallon, wow, that's an impact.
I agree. 100%, and for the lower end of the K, which is most everybody, it's going to hit. It's a tax on the margin, 100%. I think you're reading my emails because I just saw my research coming in that we're just about to put out. We have a leading consumer spending index. It's holding up. Okay, so when you put the upper end of the K and the lower end of the K, this thing is not falling apart here. And so the really critical thing is when a shock happens, where are we in the cycle? And at the moment, we could take a hit.
Pretty solid.
We're gonna have to cut it off here
Yeah.
because we got really important bracket stuff to do. Is Farley Dickinson in
Farley
the
Dickinson.
No.
March Madness?
No, but Duke is. Duke
Yes,
is
we are.
kicking it.
Yeah, we'll see. Sienna today. We'll see.
See, that far. Folks. I know nothing about it, and I love this weekend.
Yes.
Yes.
We know the Sweet 16 by Sunday.
32. Yeah, I guess. Yeah, that's how it works. Yeah.
That's how it works.
Yeah,
Okay.
but it's a big weekend in Vegas. You just go out to Vegas and you just watch. Go to the sportsbook, Tom, and you watch like 3,700.
Even with
basketball
all
games.
the
That's so
new
good.
investment, you
It's
still
amazing.
go to Vegas.
Sure, absolutely. It's a
Very
guys'
cool.
weekend, big time.
For the record, you're selecting Duke.
Yes. I have to. I have no choice. I'll get my head taken.
Right, you have an offspring. Yes.
Oh yeah, that's why at Purdue it's paragraph 42 of my agreement. Lakshman Achuthan, thank you.
Thank you.
So much. With Economic Cycle Research, ECRI, again, we protect the copyright of all of our valued guests, and we'll get to that in a moment.